What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you hit that subscribe button if you're new and the thumbs up button if you're returning. Welcome back. Happy Tuesday. Obviously, took the day off yesterday from videos. I got so sucked into a bunch of projects and I had to run a bunch of errands. But we're back. Today we're talking about Bitcoin. We're talking about potential Bitcoin price action. We're talking about EOS, what happened with EOS, what's continuing to happen with EOS. A few other pieces of interesting news, and finally a tweet storm that a tweet thread that I wrote yesterday, talking about that briefly, but really just letting you guys go check it out. I think that it will. It's self-explanatory when you see it. Good to be back, and we're gonna rip through this. We're not gonna do a ton of news today. We're just gonna really just get to the good stuff. Just dive in. Crushing it. All right, let's look at Bitcoin. Now, you can see if you're listening on the podcast, I should say, it's the daily chart, and we are looking at a triangle. Okay, that triangle is connecting the February 5th wick to the April 6th bottom of 6,500 area, and then on the top we are connecting the wick from March 5th at 11.6, and then the kind of recent high of 9,600, give or take. Now, you can kind of imagine what this would do, right? So it goes up, it bounces off the top, it bounces off the bottom, it bounces off the top. It's very, technically speaking, if you were going by the book, what would happen, theoretically, is that it would go down and it would bounce off the bottom again, and then it would launch up. Now, will it happen? That's up for debate, but that's technically what would happen on this sort of shape. And you can make a case either way. There we go. Good news, Brave. All right, well, Brave, great job. Brave browser, using it as always. And so that's what the triangle represents. That's why I have it up here, because I think in moments like this, you try to zoom in, you try to figure out what's going on with Bitcoin these moments. And yeah, we can get into the weeds of the 1 hour, but look at this. It's complete chop. And it's very, very difficult if you are a short-term trader to try to trade this. Obviously people do make plenty of money on it, but the algos are coming. The high frequency stuff is coming. This sort of price action is just really hard. And as that happens, you tend to move out to both larger time frames and into potentially different coins. But that's why I'm really focused on the bigger picture at this point. And the bigger picture has a bias of going down. Now, that's kind of technically speaking. At the same time, a case could be made for critical support levels here. And more importantly, over the last month, we have seen, in my opinion, people just hitting the buy button and driving the price up like crazy. So in my mind, the way I kind of visualize what's going on and what I see in the charts based on the short-term bars that are just massive vertical bars is that we have a group of people that either they're colluding or they're not, I don't know, but they're doing huge market buys, driving the price way up. We're seeing some consolidation, then they're doing more market buys. And every once in a while, there's a big sell-off. But overall, this growth has been fueled by, let's call it 6 individual market buys, right? That's why they say it's very difficult to time the market, because if you miss the days or the moments that the market really crushes it, you miss out on a massive amount of the returns. Same thing is true in the last month, where if you try to time this, it can be very, very difficult. That being said, I think it also, without these individuals just continuing to have these huge mega buys, which our story right now was George Soros, Rockefeller, and all these trading investors coming in, but we don't know for sure, right? They're not coming out and saying, look how much I bought, obviously. Without those, there's bearish momentum. We're still in a technical bearish cycle with the moving averages and everything else. So the market should be going down, but it keeps getting driven up by huge market buys. that is why I'm not very confident in any one direction. That's why I'm not making any clear trading moves on Bitcoin right now, because there's a great story. If you guys have read Trading in the Zone, you'll know this story. If you haven't, you heard me talking about it to death. But he talks about, there's a guy who, he's a technical analyst, and he can't seem to figure out, he's doing all the charts, he's very, very proficient, but he can't seem to make any money. So he goes to a coach, and the coach says, look, go get a job with somebody who's making a lot of money in the markets and learn from them. So this technical analyst goes to a huge commodities trader in Chicago, and he sits down with the commodities trader, and they're sitting there, and he says, all right, bring me an idea. He comes in, he brings him a beautiful technical chart, and he says, here's what it looks like. Here's the support. Here's the resistance. Here's the exact level. This is where it has to change. And the commodities trader was like, so you're telling me everybody in the market is looking at this line right now, and they're saying that this is exactly where the price needs to bounce because that's what the charts say. And the technical analyst says, yes, that's exactly what I'm telling you. And so the guy picks up the phone, the trader picks up the phone, calls his pit trader, the guy who actually executes the orders, and goes, all right, go and sell 2 million baskets or barrels, bushels of soybeans or whatever it is. Guy goes and executes it. 3 minutes later, the price of soybeans goes right through that support level, and the market moves down like 8%. And the technical analyst is like blown away because it doesn't fit into the technical charts that he has. And that's why we always try to look at the technical. We always try to look at the macro, the fundamental. We look at all of this, and we look at probabilities, because the technical could say one thing, but on it, like someone down the street here in San Francisco, somebody could go on their computer, fire up an exchange, and press the buy button for 35 million, and this price could go up. It could just skyrocket, change the whole structure of the charts. So that's why you always gotta, manage your risk, use probabilities, use good entries, all that sort of stuff. That's also why I am very hesitant right now on Bitcoin. I don't have a bias, bullish or bearish. I'm just sitting back and waiting, and I'm gonna wait for more confirmation. And I'm really focusing on some of the larger time frames. I'm gonna see if this triangle does play out, or if we break through. If we do break through, I want to see it come back, test that line. If we don't, then we start to look at previous support and resistance as we go from there, because we do have some good support levels coming up, which is a good sign for keeping the price up. So that's where we stand with Bitcoin. And it's not the most exciting news in the world, but it's also, remember, protect your capital, preserve your capital, grow your capital. So got to get those first two dialed in first. Now, let's look at EOS. Okay, so EOS, I think the first thing, if you follow me on Twitter, if you don't follow me on Twitter, go on twitter.com/Carter Thomas. I tend to post there more than anywhere else. With EOS, we had a run up. We talked about EOS last week. Hopefully you guys picked up some based on all the rumors and the way that it was getting, all the exchanges. It basically went parabolic. And then we had this second peak, and this is where I tweeted, hey, I'm selling my EOS, or I'm taking my profits in EOS. I'm keeping some in EOS. And then it proceeded to dump. Now, let's walk through that decision process, because I think that's really the important part. You go on Twitter, you talk to people, they're like, oh, well, there's this reason, it's overvalued, and it's centralized. Let's talk about the decision process, because that's what really matters. That's what's really going to make you money. Like all the noise, who cares? All right, so the process was, we saw this, what's called the price climax. So for anyone listening, EOS basically did exactly what Bitcoin did. And you'll notice that if we go to the daily chart, and I'm going to delete this triangle so it's a little easier, especially non-log. Let me see, is this on? This is not on log. Yeah. You can see, actually I think it is on log. It's a little easier to see. All right. you can see that this starts to look kind of similar to what we have here. You get this price climax, you kind of got this like interim thing, and then you get this second attempt at going up. It's exactly what happened on Bitcoin on the daily chart, which is obviously a different time frame, but it's the same structure. We talked about fractals on Twitter last week. Same thing, keeps going down, and now we're seeing another attempt at bringing the price up. It's the exact same thing we did on Bitcoin, right? And so from a decision process standpoint, there are no, I mean, one thing to realize in markets is that there are always patterns. It's just that repeat themselves. It's just that the outcomes don't repeat themselves because there's different market participants. That's a really important point, is that certain patterns will happen, but outcomes never will be the same. And so people often get those confused, which is why they get themselves in trouble, because they think like, oh, this RSI is oversold, I should do this now. But that's not how it works. With Bitcoin, this pattern has proven itself over and over and over again because everything in crypto is speculative. Saw EOS, saw a peak, I saw the second peak coming, that's where I sold. Because I didn't know. I had a very good, high probability bet that this, as a high parabolic, high intensity buy situation, was going to behave the exact same way as Bitcoin. And we'll see what happens with the price. I don't know. For all I know, EOS could turn around and go up. For all you EOS diehard people, that's it's the Ethereum killer. It's going to do all these things. Can't wait to see you in the comments. And who cares? Maybe it will. I don't know. I mean, this could be the beginning of something huge. That's why I kept some EOS in profits. So we'll see what happens. But I do think that the important piece is the decisions. How do you make your decisions on when you enter and when you exit? Is it 1 week? Is it 1 century? Whatever. But you got to have the entry and the exit. That's everything. And that's the mental game. So I thought that would be helpful for you guys as you think about it. Now let's go over to CoinMarketCap. CoinMarketCap had a little bit of a refresh. Nice little refresh, whatever you want to call it. Looks pretty similar to me, but good on them. They're doing so much traffic and revenue off ads. They can do whatever they want for all. Logo kind of looks like Facebook Workshop though, or is it Workspaces? You should Google that and tell me what you think. It's like basically the exact same logo and font. So it's a little suspect. But let's just refresh this just to get the most recent. Go to Bitcoin here. Always switching over to Bitcoin. Now we look at the market cap. It's been bouncing between 400 billion, 430, 450 billion. Big news, obviously, is the Bitcoin dominance, which we'll talk about in a second. Now it's down to 37%, which means the altcoins are getting a lot of the juice. I think that's a combination of Bitcoin it's just kind of in this difficult trade zone, right? It's not really the bull that's driving everything. So it's not providing the returns, not bringing people in. It's not getting the same sort of excitement that we had last year. So, all that good stuff. But bottom line is the dominance is continuing to drop, which, that's always a good sign for our altcoins. So as we go down, we're seeing that overall things are relatively flat. But I think the big story is... you may have seen, I'm not going to get into it right now because it's kind of a huge topic. We can talk about this maybe tomorrow or something. I tweeted about like the altcoin 10x formula, which you should go check out on my Twitter. Interested to hear if you agree or disagree about it. But what the bigger point is that you don't want or need to be biased about what it is you're buying if you're looking to make money in crypto. Right? You buy what's going to go up, and you find the things that have the highest probability of going up. The reason I'm bringing that up right now is something like Verge. Verge had that partnership with a large conglomerate company. They own a bunch of big sites, a couple of adult sites, a couple of gambling sites, things like that. And that Verge just got hated on. I mean, people just hate on Verge the same way they hate on Tron. And it's for whatever reasons, but that doesn't change the fact that Bitfinex is now serving up Verge as part of their platform, right? That causes a huge spike in volume. You look at something like Bitcoin Private. Bitcoin Private has a lot of skepticism behind it based on Rhett. What's that guy's name? Rhett, guy who did Z Classic in Austin, Texas. Anyway, they did Bitcoin private. They're doing some other forks. Many people in the community do not think that there's any merit to this. In fact, that it's kind of it's diluting the community. But the fact remains, these are the coins that often pump the hardest because they are like, there's no way to value them, right? So you can pump them like crazy. And so I'm not necessarily endorsing that. I don't. That's not necessarily how I want to make my money. But at the same time, I'm here to be a student of markets, and how I feel and versus what I observe and what I do need to be two different things. And I would encourage anybody to try to adopt that. When you see something like Verge pump, first reaction is to being like, oh my God, Verge is such a piece of garbage or whatever. Or Verge is the best thing ever. I mean, those are both equally dangerous. Look and see why it happened. Look and see what about it drove the volume. How fast did it happen? What exchanges did it happen on? That will help you make better decisions over the long term. Now, two more things. Michael Lesgrauwait, hopefully I pronounced that correctly, is an independent investor on Twitter. I saw someone retweet this. Thought this was interesting. He pulled up some data from Wikipedia where it says that despite the huge decline of Bitcoin dominance index last year, when Bitcoin went from 85% down to 30% over the course of the year, Bitcoin accounted for more than 80% of the search interest. Now, this is on Wikipedia, and this is then he shows the geographic breakdown. And so I'll also I'll link to the tweet because he obviously give him credit. I'll also link to the tool because I went and made sure that this data was legit. I have not verified everything, but I did verify that Wikipedia does have the ability to recreate this data. So this isn't pulled off of something completely random. So you can go and you can verify yourself. You can also do your own analysis. But what does this mean? In 2017, what this means is that people came for Bitcoin, but once they got into the crypto ecosystem, they stayed for the altcoins, right? Like that's really what happened. And I would be willing to bet that is not going to change once we get back into a bull cycle, right? Potentially we are right now, like we're right on the cusp of it. But that's how it works. People in speculative markets go for yield first before they go for risk management. They go for the returns. And Bitcoin, Ethereum, Litecoin, Bitcoin Cash, which you can buy on Coinbase, can only provide so much returns. And when you see what else is out there with altcoins, it's almost impossible not to go over there. It's very, very difficult, I should say. It requires a lot of discipline not to do that, especially if you're excited about cryptocurrency. So I think that this is really, really insightful in terms of what the general population is thinking about. If you've ever been, if you live in a city or live in an area where they have something like Uber or Lyft, I find it always interesting to talk to those drivers about at what point are they in the process of learning about crypto? Or do they talk about Bitcoin? Do they talk about Ethereum? Or do they talk about Tron? Do they talk about BitConnect? Do they talk about Ripple or Stellar? Like, what do they know about? And almost, I would say 4 to 5 times, if they do know about crypto, it's pretty much only about Bitcoin, and it's kind of what they heard, like the top level stuff. They heard it's all about dark web and blah, blah, blah. So it's an interesting piece of data because you can use this to reinforce your investment thesis as you look at these altcoin movements, right? People have to go through the gateway of Bitcoin and then they get into altcoins. But there is a mental leap that happens, and that mental leap is driven on getting more yield, on getting higher returns, which then brings you to the decision process of you can't be subjective. You can't have favorite coins or less favorite coins when it comes to I just want to make money. Not saying everyone here does. I know many of you are here for the tech as well. I'm just pointing this out because this is what the market looks like. This is the market profile. Now, last but not least, I wrote a tweet thread, whatever, yesterday about Bitcoin volatility. This is something I've been looking into for a while. And I'll link to the actual thread on Twitter because, there's always some people like reading on Twitter. I also posted this on the Coin Mastery website. So you can go to coinmastery.com/BVIX, BVIX, which is an abbreviation I made for the Bitcoin VIX. VIX is a volatility index on the stock market. And it might be a little easier. I'll try to format this later today with links and stuff, but it's basically the same thing. It just might be easier to read. But the thesis is as follows, because I know many of you want the Cliff's Notes. Over the last year, I did this for January 2017 until yesterday. You can see this is kind of an oscillator. If you're listening on the podcast, it looks like a sine wave, right? Up and down, up and down. And then on the actual Bitcoin volatility chart, the green line is supposed to be a log price, but it's a very, very bad thing. So I went ahead and just manually put this on a chart to make it easier, and I correlated the arrows. All right. So if you're listening on the podcast, this is a visual thing. You're going to have to check it out, but I will give you the bottom line here. So when I wrapped up all this data, the bad news, I guess the obvious news, is that there's no indicator of, hey, when volatility goes up, price goes up. When volatility goes down, price goes down. If it was that simple, every quant in the world would be just building this into an algo, and so it wouldn't work for very long. But the correlation that I did find that was really interesting is one, that when price climaxes, so when we have a price that really spikes, the volatility doesn't spike at that climax. The volatility spikes, let's say 3 to 7 days afterwards. And the reason why is because once it spikes, there's a kind of grace period, and then people are like, is it going to go up? Is it going to go down? What do I do? Should I hold it? And I think many of you have experienced that at some point, and you understand what that feels like, because what people say they're going to do and what people actually do with their crypto is very different. And that's what the VIX will measure, the BVIX in this case. It's how much are people doing opposite stuff. And so after the price climaxes, there's confusion, the BVIX will spike, right? So it kind of makes sense when you think about it, because what's next is the ultimate uncertainty factor. And it has nothing to do with if we all know we're going up, everyone's buying. If we all know we're going down, everyone's selling. And the volatility actually goes down in that sense. And so that was the first piece. Now, the second big piece is that when you look at the BVIX chart, which I will just pull up here, and if you Google Bitcoin Volatility Index, you'll see a link. It's like the second search result. I'll link to it in the article as well. So when you look at the chart, this is a screenshot, you can see that we are in a valley, okay? There is a great theory, not even theory, it's like a investment thesis that this guy Alex Gorsuch, I can't remember how to pronounce his last name, brilliant guy, mathematician, who I give a shout out to at the end because this was inspired by an interview I saw of him, where he talks about how when you look at things, in his case, he talks about things like interest rates and how interest rates affect stock prices or economies and inflation in particular. It doesn't necessarily predict when it's going to happen or how big it's going to happen. It just predicts that it will happen, like kind of near term or far term. And in this case, when you look at the volatility, it goes up and it goes down. And guess what? It always goes back up and it comes down. It always goes back up. And in December, it kind of got more complicated, but it still went up and then it still came down. Guess what happens after you have a valley? Well, look back at the last year. Eventually, it's going to go back up. It has to. I mean, look at the data. I mean, I should say that It's just a very, very high probability that it will go back up. And based on how long we've been in a low volatility situation, we're probably pretty close. Meaning, I don't know if the price is going to go up or down, which some people may be like, oh, this is worthless. You're not telling us which way it's going to go. But that's not the point. The point is that we are about to experience extreme price action. That could be up, it could be down. But either way, the price is going to climax one way or another that is going to force a lot of people to feel uncertain. That is what causes the VIX or the BVIX to spike. You see what I'm saying? So it is inevitable, I should say 90% inevitable, that we are going to experience massive uncertainty at some point, probably in the near future. Could be because the price shoots up to 40,000 in a week. It could be because it drops to 3,000 or 4,000 or whatever. I have no idea what the actual prices would be. But it's going to cause a lot of people to wake up and be like, what do I do next? I don't know what to do. And they buy or they sell in very, very different ways. Everybody's doing different stuff at once. So whatever, something's going to cause that. The data is telling us that is going to happen. We just don't know if it's up or down. And so what you can do about that is you can create some sort of strategy. And I know some people are like, hey, can you give us some strategies of what to do? I think we'll talk about this over the course of the week. I think the first thing to do is to write down what would a best situation be for you if the price went down to 3,000 today or tomorrow, if the price went down $100 tomorrow or didn't move, or if the price went up 10,000 tomorrow, like it went up to like 20 grand. In each of those situations, write down, would you like to have cash? Would you like to have Bitcoin? Would you like to have altcoins? What would you like to own? Like, what would your best situation be? Would you like to have it on an exchange? Probably not. I would definitely not recommend that. How much would you spend? Like, how would you attack that? Would you even do anything, or would you just sit back and watch? But have it written down and hold it, like put it next to your computer, do whatever. And like, make sure that before you do anything in the market, you go through that checklist, right? If you sign up for our newsletter, I have a checklist. Like, you can go on the coinmastery.com, just sign up for the newsletter. I think it's on email number 2 or 3. There's a checklist that you can go through before you make any trading decision. You can create your own checklist. But the data, the charts are telling us that we are going to experience this at some point. And even if it, like, yeah, it's, we all obviously all hope it's to the upside, but remember, like, it's not all puppies and ice cream if it goes to the upside. I mean, that uncertainty is killer, right? As many people experienced in the last 4-5 months. But it is coming. The data is showing us that it is coming. And you need to have that strategy dialed in so that you do not get sucked into the emotional roller coaster that comes with volatility. Okay, so I'll link to all this stuff. You can go check it out. But I do think that this is helpful and potentially interesting. All right, well, it's been great. Tuesday, good times, and I will catch you guys later. All right, peace out.